Would you like to get paid to borrow money? I know that sounds like a crazy concept, but it's actually happening in Denmark where people are getting paid to take out mortgages. It's also happening in countries across Europe where corporations are getting paid to borrow, and the same thing is happening with governments who are getting paid to borrow. This is only possible due to a concept called negative interest rates. And in this video, you're going to learn what negative interest rates are, how they impact your investments, and why they may be here in the US very soon. Stay tuned. So in order to explain what negative interest rates are, I want to break down the root words of negative and interest rates behind me. So up until recently, negative interest rates never existed. And there's a good reason why, which you'll learn here in just a minute. But in order to understand what this concept is, so negative means to subtract, right? So to subtract interest, your interest is going to be what you earn for lending money, right? So we're going to subtract money earned, okay? What a negative interest rate is it's a negative amount that is subtracted from the initial amount that you invest. Now, why would somebody do that? You might be asking yourself that question. Well, the reason being is that people are so concerned about getting their money back that they have prioritized just getting a return of their capital instead of a return on their capital. And so they're willing to take less money in the future than what they invest today. And just explaining it, you can tell that I'm still a little perplexed by it. But in order for this to make more sense, let's look at an example. Let's say that you have $1,000 to invest, and you think that investing in a German bond in the German government is a good idea. So you take that $1,000 and you go out and you buy a 10-year German bond, right? And let's just say today that bond is paying you negative 0.50%. So negative 0.5%. Well, at the end of 10 years, you're going to get back $995. Now, most people are used to getting more money back in the future than the amount that they initially deposited. But due to interest rates being suppressed by central banks across the globe, what you're seeing is that people are more concerned about getting their money back than they are about earning anything on that money. And this is a concept that hasn't happened ever before, but currently there's over $15 trillion in negative yielding debt. That means that there's debt out there that is guaranteed to lose money. Now, when that's happening, when you're buying a bond that's guaranteed to lose money, you're actually paying the government the interest that you would have earned, right? So instead of the government paying you interest for you lending them money, now they're actually charging you in order to invest. So what we saw this past week is that a bank in Denmark is actually offering negative mortgages, meaning that they will pay you to go and take out a mortgage. And the way that is working is that you are being charged a negative interest rate that is less than the amount of interest that they're having to pay the ECB. So it's a really interesting concept. And why would this matter to you, especially if you're a U.S. investor? Today, the U.S. 30-year bond is paying you about 2%. So why does that matter? Why are negative interest rates a big deal? Well, because right now we're seeing that negative interest rates are spreading across the globe. It was only happening in Japan, then it slowly spread into Germany, into European countries, and previous comments from former Fed Chairwoman Janet Yellen said that negative interest rates are a possibility. Now, this is significant because you may have seen headlines recently saying that we could be going into a recession. And in order to get out of a recession, typically the Federal Reserve cuts interest rates. Well, they don't have too much further to go for interest rate cuts because the 30-year bond today is paying you about 2%. historically, they have to cut interest rates by about 5% in order to get enough stimulus in order to revamp the economy. So if they can only cut 2% before they start going negative, then it's a very real possibility that we could see negative interest rates here in the US. I'm not saying that that's exactly what's going to happen, but it looks more than likely that we are going to see that. So what should you do as an investor? Should I go ahead and just forcibly give money to these corporations and governments because they're only offering this negative yielding debt? Or instead, should I go somewhere else where I can get a positive return? You've seen many investors shift into dividend paying stocks. I'm not saying that's the right thing to do because there's risk involved with that, but that's one way that some investors have pivoted when faced with negative yielding debt. Another thing that people are doing is buying gold. Gold has maintained its store of value, meaning that an ounce of gold in 1970 could have bought you the same goods, let's say an Italian suit, then that it could buy you today. So gold is seen as a store of value. Many investors are moving their money into gold. And then you also have some investors who are moving into physical assets like commodities and real estate. So there are a number of different options for you. I don't know which would be right for you without looking at your situation, but there are a lot of different ways that you could play negative yielding debt. However, some corporations and governments and pensions are forced to hold this negative debt because it has the security that is required by the investment council. They say, hey, you have to invest in very trustworthy instruments, and it just so happens that those trustworthy debt instruments now are yielding a negative interest rate, and so they're forced to buy it. But you don't have to do that. Instead, you should be looking at your portfolio and determining what's the required rate of return that you need on your investments, how much risk do you need in order to meet your goals, and are there other ways outside of investing in negative yielding debt that you could meet those goals. Hope you found this video helpful. Tell me, what are your thoughts when it comes to negative interest rates? Do you think that it's something that's going to stick around, or do you think that people are just going to start pulling their money out, putting it under their mattress? I'd love to hear from you. Thanks a lot.